I'm here with Richard Bell, and Richard Bell is the owner of Bell Alliance, the largest real estate specific law firm in Vancouver, correct, Richard?
Yeah, we do more closings of any firm in Vancouver. It's you can imagine it's a bit, even now it's still a busy market.
Right. So I wanted to get you on today because obviously the Christy Clark government wants to partner with first-time buyers. They've introduced this new program, and I'd mentioned to you off air here that I've heard a lot of people referring to it as free money, and I think you'll agree with me, it's anything but free money. Maybe you can just give us a little rundown on how exactly it works.
Yeah, so basically it's a program to help those people that really can't come up with their down payment. And what they will do is the government will match what amount you can come up with. You, of course, with the first mortgage, have to get insurance on that, CMHC or one of the other insurance providers in Canada. But as we look at the numbers, Mark, it just seems that there's a bit of a challenge. The closer you get to that maximum of $150,000 income, probably the more likely it is that it may work for you. The challenge is that your first mortgage is still looking at what are your debt service ratios.
Right, and you mentioned the 150. So worth mentioning is it's got 150 combined income cap on the application.
Absolutely, because the government doesn't think they should be supporting people that are making $250,000 a year in the household. And there are, so I think it's going to help a few people. This is not a panacea. This isn't the solution that allows all the people with incomes under 150 to get into the market. So there will be few. My understanding is they've had over 350 applications so far. But it's still sort of a program in its infancy. How are the banks going to be looking at this program? But ultimately, they're still going to be concerned about debt service ratios. Right. So there is a bit of a concern that the program is simply increasing the debt load of some individuals who probably shouldn't be absorbing that increased debt load.
Right. So I understand it, and we talked about this earlier. If someone, for example, is purchasing or wants to purchase a $500,000 condo in Vancouver, they've got to actually go out and get pre-approved, and then once they have this pre-approval, if the minimum down payment for that purchase is 5% or $25,000, if they only have half of that, which is $12,500, the government is then going to match them and say, okay, here's the balance of your down payment, go out and buy. Exactly.
And so that gets them into the market earlier, hopefully building equity, hopefully values continue to rise. But as we've heard in the media, obviously, the federal government has some real concerns about the increasing debt load for Canadians. So home ownership is something we all strive for. So it's just one little piece. Quite frankly, I think Bank of Mom and Dad is probably playing a bigger role in that market than the provincial government. And let's be frank about this. We have an election coming up. So we've seen a number of steps by the provincial government. At the end of the day, I'm not sure that Vancouver is going to become a cheaper place to live in the future, but they felt they had to do something to help the first-time buyers.
Right. Now, this loan that the government's going to match with you, the payments don't kick in for 5 years. Is that correct?
That's correct. And then you've got a standard amortization of 25 years to pay it off. So, again, that's another debt you're carrying. So right. I think people just have to be cautious as to whether, in fact, they decide, well, why don't we just try and save up a little bit more money over the next 12, 24 months to be able to come up with the appropriate down payment. And that's hoping, of course, that there's some stability in the market in terms of price increases. So it's really, there are going to be some people who this really will be helpful for them getting into the market.
So first-time buyer, maximum combined income $150,000.
Exactly.
Have to get pre-approved first.
Exactly. Yes.
And they don't have a payment on the loan for 5 years, but then it kicks in at whatever the interest rates. And I think that's the other scary thing is I think we can all agree that 5 years from now, if you were a betting guy, interest rates are going to be higher than they are today.
Yeah, so one would hope is in recognition of that people would look at, well, maybe let's put something against that second mortgage before the end of the 5 years.
Right.
But I think you and I both know everyone tends to be pretty tight when they're in this situation.
Right.
And again, the definition of first-time buyer is you must have never owned a principal residence any place in the world. So again, smaller group, helping those people that have been in Canada and British Columbia for a long time. They're the locals, so to speak, right?
Right. Well, that's it's going to be interesting to see. I guess time will tell, and I appreciate you coming on today, and I'll get this out, and I'll get your connection at the bottom of the video.
Okay, thanks, Mark.
Okay, thanks, Richard.